Hi, JJ here with the Art of Value. Meta stock has been absolutely hammered in the market since September 2021. It's up over 10% today, and it's one of the biggest one-day rallies for a long time. However, it's still down over 70% since then. With the Metaverse part of the business not really being a growth story yet, with results perhaps years away, and other parts of the business, the ad business being a little bit under pressure at the moment, is causing investors to wonder if the stock price will ever recover, and when it does, how much. That's what I'm going to look at in this episode. And also, do investors want a slowing of pace in investment in the metaverse? I also look at what investor Michael Burry has been saying recently about Mark Zuckerberg and Meta in his tweets. So I'm going to look at Burry's latest tweets. I'm going to look at the latest earnings and the various possibilities and probabilities for Meta and Meta stock in the next few years. If you're watching on video, YouTube or Spotify video, you'll see the chart on the screen. The stock price is way back to March 2016. It's fallen that much. Zero return since then. Before I get into Burry's tweets, we need to understand that Michael Burry has actually owned Meta stock. If you look at the screen, you can see his activity in the last couple of quarters. You can see on screen in Q1 2022, he bought 80,000 shares of Meta stock, and then the next quarter he sold out 100%. He did have concerns about the macro environment and Meta as well, and he sold out of nearly everything in that last quarter. Okay, let's try and interpret two tweets from Michael Burry about Meta and Mark Zuckerberg. They can be a bit cryptic as tweets, but let's see. He says, Zuck is an FLK ASD guy. What he means there is a funny looking kid. ASD is autism spectrum. But then he says, so am I. I get it, but I know what I am and my obsessive interest in life, dogs, species, building guitars, building computers, always pain me because I recognize their uselessness. If you don't know, it doesn't pain you, but it pains others. And so it is. So what I understand that to mean is he's saying that Zuck is on the autism spectrum, on the spectrum like he is, so he understands how Zuck is thinking. I think he's saying that Zuck is getting obsessed with Reality Labs and building out the metaverse, whether it's useless or not. He thinks it might be useless, and Zuck hasn't really realized that he's on the spectrum, and he doesn't realize he's getting obsessed in something that could ultimately be useless. And in Zuck's position, that can mean spending billions and billions without realizing what he's doing. He's having to lay off 11,000 employees from macro conditions, but also to try and save money for the company because they're investing so much in the metaverse. I think that's what Michael Burry is saying there. Burry's saying that he understands because he's obsessed with building guitars and things that he recognizes as useless, but he knows he's on the spectrum. I don't know whether what he's saying here is correct or not, but it's an interesting perspective. It could also be something, if Mark is on the spectrum, it has helped him into the position that he is today to start Facebook and be singularly focused on that and build the business to where it is. The other relevant and interesting tweet from Burry is this one. He says, do we have another couple of Elon Musks who can do to Meta and Google what Musk is about to do to Twitter? I take that to mean that Elon Musk is taking over Twitter. He's bought Twitter. He's looking at it with fresh eyes. Mark Zuckerberg said that Twitter was a clown car that fell into a gold mine, talking about Twitter management. He's going to look at it with fresh eyes, and he's cut some of the workforce and cut some of the fat. I think this is what Burry's saying, and maybe fix it up. And that's what also Google needs as well, rather than being bloated Silicon Valley going into recessionary times, probably, possibly. A lot of Silicon Valley companies are cutting jobs right now, 10%, 20%, including Meta. And Google, he's saying, could do with something similar, looking at it with fresh eyes and looking at the finances from an investor's perspective. I don't think I agree with Burry here about Meta in particular, because they have been very good. Zuck's been very good at monetizing their business, the ads-based business, and they're still doing that. When we look at the earnings report later on, I'll show you what I mean there. They're even now coming up with new ways to monetize and add value to the business they already have and grow that. It's just that the metaverse business is overshadowing things. The investment of that is overshadowing what they're actually doing in the other part of the business. One example of that is the click-to-messaging ads that they're growing at the moment. It's already a $9 billion business and growing very fast. So that things like that can't be ignored. Now turning to the recent Meta earnings update, which seemed to disappoint a lot of investors, including disappointing Jim Cramer from CNBC, who apologized to viewers on air and started crying, apologizing for his mistake in recommending Meta and trusting Zuck with the future of the company. So I'll show you what disappointed Jim in particular. So let's start and have a look at the earnings presentation. If you're enjoying this episode, getting value out of it, please consider hitting that like button on YouTube to help spread it to more people. That'd be great. Thanks. Looking at some of the numbers, we can see that the advertising revenue has gone down, mainly due to the macro environment, I think, and with Reality Labs losses widening, pouring more money into that with no return for years to come, probably. This expenses as a percentage revenue slide is also interesting. We can see that research and development cost is going up 33%. The quarter before it was 30, before that was 28, before that was 21. So it's going up over time, reflecting what they're putting into Reality Labs and other areas too. And we also have capital expenditures here, CapEx, which in the year-to-date 2022 was 22.8 billion. And year-to-date 2021 was 13, so gone up significantly. And quarterly, 9.5 billion in Q3 2022 and 4.5 billion in Q3 2021. So that's a huge jump in a year, again reflecting their expenditure on Reality Labs and other areas too. An interesting positive that I think slipped under the radar a bit was the family daily active people or active users daily. It's up to 2.93 billion, which is incredible, which is actually going up still. Before that it was 2.88, before that was 2.87, before that was 2.82. You'll see on the bar graph if you're on video here, it's actually still going up, which is pretty incredible for that many users. This is the same thing expressed in another way of family monthly active users, which is 3.71, before it was 3.65, so still going up. And this one, family average revenue per person, which has gone down a little bit. So users up, revenue down. This is the slide that disappointed a lot of investors and made Jim Cramer cry and apologize. It is the free cash flow. So for Q3 2022, it is 173 million. Before that, in Q2 2022, it was 4.45 billion. Before that, 8.5 billion. Before that, 12.5 billion. So it's going down and almost zero compared to what it has been as high as 12 billion. So we see the net cash provided by operating activities has gone down to 9.6 billion. It has been as high as 18 in Q4 2021. So that is going down. That concerned Jim Cramer, whether that matters or not, but it concerned a lot of investors. Digging a little deeper though, and on the earnings call, it may not seem as bad as that. There were some real positives there with the other businesses apart from Reality Labs, which the focus is on. One of them was Reels revenue. Business messaging, as I mentioned, it's already $9 billion in revenue. And Reels revenue grew from $1 to $3 billion in one quarter, which is pretty positive. So Reels, a competitor to TikTok, has grown 50% views in 6 months, which again, probably a little bit under the radar with the focus on the metaverse, because that's all you hear about in the media. Another positive there is user engagement is increasing with 1 billion Reels per day shared on Instagram. Another thing that's kind of missed and talk about it in the media in particular and on social media is that most of their investments are actually not going into the metaverse. They're going into other areas. Most of their investment, the talk is of how much money they're putting into Reality Labs and building the metaverse, but a lot of their investment is going elsewhere for real growth in revenue that's already getting results, as I've just mentioned. But a lot of analysts and investors don't really care about this. They're just concerned about the pace of investment in this metaverse. They see it possibly as wasting money with results maybe never or further down the track, but ignoring these other investments that they're making that are having almost immediate returns, growing revenue in those areas really quickly, but a lot of being spent on CapEx as well. Zuck mentioned this in the earnings call. He mentioned that a lot of investment is going into other areas as well, and that the family of apps bets are working, and he thinks the metaverse will work in the end too, of course. And added to that, in the follow-up call which they had, and there was obviously concern about the CapEx and where the money was going, they said, yes, a very small portion of the 2023 CapEx budget is supporting Reality Labs. So really the lion's share of our CapEx investments are supporting the family of apps at this point. So they're emphasizing that there's still a lot of investment going into the family of apps, which is providing real return and fairly quickly. In a minute, I'll tell you what I think of Meta, how I interpret all this information and what I think it might happen going forward, or the probabilities. But first, Let's look at what super investors that own Meta stock, and it's a lot. It's one of the most popular stocks. Value investors in particular have been buying it because as the price has been plummeting, in fact, quite a few owned it before it plummeted, which they've kind of lost a lot on. But if you look at Dataroma, there's a huge number of investors that own it. People like Pat Dorsey, Robert Vanel, David Tepper, Bill Nygren, Terry Smith, Bill Miller. So if we look at this chart here on this site, we see it was one of the top 10 buys last quarter from this group of super investors, and also top 10 buys last 2 quarters. So it's been a popular stock to buy in the last 2 quarters as it's been going down, down, down. So what do I think? I'm not a shareholder of Meta. I'm not planning to be a shareholder of Meta, although it is tempting with the price dropping so low. As a value investor, it's tempting when things get so low that it could have a high return over the next few years. It's way back, been wound back. As we've seen, the ad businesses, and apart from Reality Labs, are still going pretty well, even though there are macro concerns, and it's probably natural that the advertising business will slow down if there's a recession or going to a recession. It's happened with a lot of the other businesses focused on ads as well. As I said, I'm focused on small caps, so I'm not really interested at this point, but some investors say that there could be a 100% upside here, maybe 2, 3, 400% from here. If it recovers, there needs to be catalysts to recover, so you have to think about what those catalysts might be. One of the catalysts might be that they decide to spin off Reality Labs, put some money into it, spin it off, and just have it as a separate thing, and people would focus on this family of apps, which is still going well, still going very well, and there's revenue building, different types of revenue building up in there, even though it's down a little bit from the macro environment. I think if revenue goes down, if recession hits and the ad business gets hit, maybe Zuck will have a rethink about what to do, or the pace of investment in the metaverse and his Reality Labs. He might do what Michael Burry said and actually realize that he's too focused on the metaverse, and maybe realize that they need to slow down the pace or divide it off, or maybe bring in somebody else, a CEO, to look after Facebook and their family of apps while Zuck focuses on building the metaverse. What do you think of Meta? Do you think Zuck will be able to pull off this big second act of the metaverse, building the metaverse out and having that generate a huge amount of revenue? Or do you think it won't work and it's a big bet that'll be useless and come to nothing? Let me know in the comments what you think of its future. I think the main thing that investors worry about is that Zuck is being too focused on the metaverse, and he's betting the whole business, this huge business and very successful business, on something that's a moonshot and it won't pan out. One thing that's different about the starting of Facebook, it was growing very fast. Even though when it was small, it was growing hugely. With the metaverse, the users just aren't there yet, so they're pouring huge amounts of money in, and there isn't a user base that's growing. Investors can't see how it's going to succeed yet. There's just no base there. With Facebook, it was obvious. There were those network effects with Facebook right from the beginning, when it was in Harvard and spreading to other universities, and then outside, everybody could see how fast it was growing. Investors could see how fast it was growing. There isn't that yet with the metaverse. There isn't that user base that's growing. It's different. They're putting in a lot of investment in helping to grow it, build it, and they will come, but that's yet to be seen. So that's why the share price has definitely gone down. But there are catalysts there that could raise it in the future, but it's hard to see where that will come from just yet. It probably will take Zuck to sort of say, hold on a minute, I've gone too far, too fast. So there we have it. We'll see what happens with Meta in coming years. I'm not planning to be a shareholder. As I said, I'm focused on smaller companies, but it will be very interesting to see what happens. Zuck's done it once. Can he do it again? It's really changing the whole business, but they do have a solid base there that's still doing very well. So we'll see what happens in coming years. If you've enjoyed this episode, if you think you've got value out of it, please consider subscribing on YouTube if you're watching there. If you're on your favorite podcast app, follow or subscribe, whatever it allows you to do. And I'll see you next time. Thanks for watching.